Welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. It's Friday. That means I have my partner in crime, Chris Dearborn. He is the Managing Director on Nasdaq's Market Intelligence Desk. And you know what, Chris? We are just about 3% off all-time highs.
Unbelievable, right? Considering what we saw in May, how the market sold off, the volatility that's crept back into the market the last 2 weeks. You potentially have a nice 2-week run, even though the markets are kind of floundering here right now a little bit. It's been a lighter volume week. Trading-wise, you've had a lot of discord on the economic front, especially on the tariffs, the macro, the Middle East situation, but the underlying economic data for the U.S. is still showing growth, albeit at a slower pace, which goes to that whole global economic slowing theme.
Well, you know what? I think the whole thing is everyone has this expectation that we're going to get the rate cut in June, right? In June. In July.
30% for June now,
There you go.
after this week.
Expectations are higher for July.
85%.
Whether it happens in June, whether it happens in July, markets are pricing that in. Traders, that's what they're really taking a look at. What happens next? I think that's really what the question is. What happens next?
So ideally what you think that's going to happen from a trader standpoint, right? Investors like certainties. That's why you're seeing lighter trading volumes and not a lot of conviction on the up or the downside moves. That's why you see a mixture of people buying bonds, buying gold, but still buying equities.
Right.
It doesn't make any sense. It's all.
And you guys called that out in the note for the Midday note, where
Mike Sokol, my colleague, called it out in the note today.
Absolutely.
Things just aren't making sense. So what does that tell you? It tells you that we're fully invested and people are just positioning themselves just in case something else happens. Ideally, what would work here from a trader standpoint is that you get the rate cut, you get talk about potential second cut or even some other type of stimulus from the Fed, and then a resolution to the U.S.-China trade talks, a resolution to the Middle East situation that would be not necessarily favorable, but calming for the markets. Peace is what investors want.
Right.
So you can get back to the business of companies producing, growing, and with that, investors reaping the profits and stocks moving higher.
Even if you look at the crude market, with the escalations that we're seeing with Iran,
right,
hasn't overreacted, in my opinion.
Oil's been on a significant downside recently. It touched 51. You had a double bottom in the stock and in the commodity, and then you only had a nice 4% bump off the bottom after these two tankers were attacked, right? So that's kind of still on the upside swing there, but there's plenty of production. The OPEC's meeting recently and everything. There's still plenty of supply. The question is, how much supply is going to need going forward, and are these players significant to the U.S. market?
Yeah. All right. Let's take a look at a couple charts.
Yep.
Let's pull up the S&P 500.
So great chart. Great chart. It shows just what you said before. We're less than 3% off the all-time. Yesterday was like 2.2%. So what you're looking at here is a daily chart of the S&P, and you follow along with the S&P with the simple moving averages, the SMAs, right? So the 50-day moving average is the purple line. You can find it. And if you look over towards Jill, you can see that you had the V bottom with the sell-off in May and a significant move up. And it looks very similar to what happened in December with the sell-off in December leading to Christmas Eve and the significant move up. Now, what you're looking at here is it coming into a consolidation pattern, probably. But what you're looking at is for the base above 28.75, give or take, and hold this 50-day moving average, because from there it has significant legs. If it falls, you have very tight support. Again, depending on what happens on the macro side, this is a very bullish-looking outlook for the S&P, and this could be one of the drivers on the technical side that can move us forward.
Well, it's so interesting because you see, that V pattern there, and it looks like this tremendous move that we had to the upside.
Yep.
But as Brian pointed out in the note today, we're only 0.5% higher than the January 2018 high. So we basically haven't done anything in a year and a half if you just isolate this chart.
Right. If you look at a longer term position, you take a 5-year weekly out, it looks flat.
Yeah.
18 months of flat. So again, living in the moment as opposed to investing for years.
Right.
Which one are you going to do?
Yep. All right, well, let's take a look at gold, which is interesting. As you said before, gold, bond, and stocks all trading higher, just broke out of a 14.
So this is kind of a noisy chart, but it shows you the pattern gold. So as most people know, gold is generally used as a hedge against equity downside drafts. And what you're looking at is we're trading at 14-month highs, 1345, 1350 here. It's trading above all the moving averages. And if you look at it recently, it's whenever the markets start to decline, gold starts to rally up. We still haven't hit the peak back in 16 when you're trading at 1470, 1375, 1400, give or take. But what you're looking at here is fear. People are buying safe commodities. They're still investing. People are investing here because you look at the bonds too. The yield in the 10-year is trading at 2.08%. People are buying bonds, but they're not really selling equities. So that's kind of the dichotomy of the whole situation. You sell the equities, you run to the safety plays of bonds and gold. You sell bonds and gold, you run to the risk on in the equities. This is showing you that gold and the S&P that we just looked at before are both very bullish in nature. They both can't hold up at the same time.
All right, now to wrap up here, next couple of weeks are going to be pretty busy. You have the
Yes.
G20, FOMC meeting, Quad Witch, Russell rebound. We have the end of the quarter. Some significant trading events on the horizon.
Absolutely. So trading volumes for this week have been very light, averaging less than 6.8 billion shares on the tape. We average about 7.1, 7.2 on an annual basis. You've got two major events coming up that are going to add significant liquidity to the markets. Next week on Friday is Quad Witch that goes also along with the S&P and Nasdaq family of indexes rebalancing. Expect it to be one of the highest volume days of the year at the close and in the after hours. And then the following Friday, the last day of June, is the infamous Russell rebalance. Again, a significant liquidity event. Look for 10, 11, maybe even 12 billion shares to trade on the consolidated tape. Most of that happening in the final seconds of the day when the markets close.
All right, my friend, have a great weekend. Thank you as
so much.
always.
And happy Father's Day to everybody
Thank
out there.
you to all the dads out there, and thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.